I'll mute myself now.
No, not really. Can okay. Discuss. Not really. Actually, what happened is that nothing really changed. The consistency has to be there. But, you know, the reason why the consistencies will be there is that before, somebody like you used to just apply technical analysis alone.
Yeah.
You understand? But of recent, I look at it. Technical analysis alone cannot do this job. All right? You need to combine both technical and fundamental analysis. That's the best way to approach this class. Because the truth of the matter is that not many people know that it is actually fundamental analysis. All right? Fundamental analysis that give the direction of the market. Do you understand? Fundamental analysis gives direction to the market. Then, after you have decided on the direction of the market, by virtue of the fundamentals that are before you, it is then that you are now qualified to go back to your chart and see technical direction that reflect the direction of the fundamental.
Wow.
That is it. Okay. For instance.
Okay.
Bring my own phone.
Let's look at Euro AUD, for instance. If you look at the fundamentals of Euro AUD.
You can see your screen now.
You can see my screen?
Okay. I can see it now.
Can you see Euro AUD?
Yeah.
Okay. Perfect. All right. So if you look at the fundamentals on Euro AUD, you will see that, you know, I usually look at fundamentals on the interest rate yardstick. There are other fundamentals. There are other fundamentals like GDP, like inflation, that is measured by what is called CPI. Okay. We have interest rates. We have interest rates, but all other big fundamentals like housing deficit, and so on and so forth. All these fundamentals you see here, they are being controlled by this gentleman here, interest rates. If GDP is too high, if the economy is growing too high, you know, bigger and bigger, much out, year in, year out, there is likelihood of inflation to happen. Because when income grows, when income grows, unemployment will drop. When productivity increases, productivity increases, unemployment will drop. All right, because the service industries, the manufacturing industry, they keep on employing people, then the growth will increase, unemployment will drop. So when unemployment drops, what does it tell you? There is income in the pocket of the people. Okay, and this income in the pocket of the people, giving them, opportunity for increasing their consumption. What does it do? What does it cause? That it will cause a general rise in prices of goods and services, and that is what is called inflation. Okay. If you look at inflation number itself, if it's high, it's a problem. Okay, it's a problem. So, but what instrument do we use to control inflation, to control growth of the economy, to control housing deficit, all this and that? It is interest rate. So don't give me the data on inflation of any country. Don't give me the data on GDP. Don't give me any other data Just give me the data on interest rate and I'm okay. I can tell you perfectly what is going on in that country. At least 70 to 80% of what is going on there economically, I will tell you. I only need interest rates. Okay? The only difference now is that if you have the interest rate figure, you need to find out if the interest rate is high. Okay? If they have increased interest rate, you ask yourself the question, upon what basis did they increase interest rate? Was there growth in the economy that was getting too much, that the need and prices of goods and services are going up, and they need to raise interest rates in order to arrest it? Or is it that there was no growth in the economy, but inflation is happening as a result of what is called supply gap? For instance, there is limited supply of energy as a result of problem between Russia and Ukraine. All right. So that supply gap in the supply of energy can result to increase in price level. How can this result to increase in price level? Energy is the basis of everything. Industry will use it. Aviation will use it. Transportation will use it. In fact, cooking gas, power stations, they will use it. And if the cost of energy is high, what happens? Every other thing or every other prices will go up. And that is inflation. Can you now see that it is not because the economy is growing that inflation arises? It's a result of another problem entirely. You understand? So once you so if interest rate is increased, in order to reduce inflation, so I need to know if that inflation is caused by a problem or is caused by economic growth. If it's caused by increase in productivity, brilliant. Buy the currency long term, because they are telling you that there is increase in general price level, and at the same time that increase is as a result of what? Increase in productivity. Who does not want to associate himself with a country that have immeasurable value of productivity? That's better than how it used to be. Everybody wants to associate with such country. Do you understand now? So you want to buy the currency because it's going to appreciate, and they are already increasing interest rate in order to police inflation. So arresting inflation for that country does not stop the productivity. It only impedes it for a little while, because if you increase interest rate, investment will drop. How is investment dropping? You have increased rate of borrowing money. So it means that cost of doing business, as in cost of borrowing, has increased. And if you are supposed to borrow $10 billion, to finance a project, you can no longer borrow $10 billion because of the cost. You are not limiting yourself to what? To $5 billion. Do you understand? So your investment portfolio will drop as a result of increase in cost of borrowing. Do you understand? So once you have idea of all this, like I know now that inflation rate for euro is zero. Okay? And inflation rate for AUD is positive, right? It's positive. So let's check. Let's be sure. I know it's not negative. They are not maintaining negative inflation rate. I say interest rate rather. Interest rate interest rate on AUD. All right. Interbank rates last. Can you see? 1.22. You see it, guy?
Yeah.
1.22. Now let's go back to the chart. Now coming to the chart now. If you have interest rate, one is 0 and one is what? 1.22. If you deposit money in that country, which one will you earn better interest? Which one will you earn?
1.22.
Correct, which is AUD. So meaning that fundamentally, we are looking forward to what? Euro AUD sell.
Oh, I see now.
Can you see now?
Yeah.
So we are looking forward to Euro AUD sell. Now, this analysis you have done without looking at the charts. You have done it without looking at the charts.
And the charts.
Yes. So what you have now to do now is to go back to the chart and see how you can align this analysis with your chart. How can you align it? So I go to daily. Already you see the flow down, downside. All right. See the flow downside. So now it's now left for you now to use, other trick, other techniques, combine them and now see what you are doing. So now, do you know that on Monday, this market is not going to go like this? Do you know?
Yeah.
Why do you think it will not go like that?
Let me ask you why.
What is in your mind? Why do you think it will not go like that?
Well, I think it's going to be quite corrective because it's Monday. We must also do it like Tuesday.
Let me explain to you why it won't go like that. Here, you have this push. Where did it correct to? Where did it correct to now?
61.8 or
yes, so even got to when it made the
double top.
No, forget that. Don't say double top again.
Okay, so never mind.
Nothing like double top. Now you are talking of double top, you'll be selling at double top resistance. Nothing like that. That one is a market construct to deceive people.
Okay.
It's a market construct to deceive people. That's all. Okay, let me do a little digression.
Okay.
For instance, here, you want to call it double top now. Is that not?
Yeah.
So when market gets here, they'll tell you it's at resistance. They say you should sell, Abi. But somebody like us, when we see it like this, we are looking at the left, looking at supply area, big supply. When this market was supplying here, did it not go all the way down? That's to tell you that the order that is pumped at this level is not a small order. So I want this double top to be invalidated to come and pick order at the same level. It's as simple as that. Come and pick order for me here. And when I look at this level, what is the psychological level that is there? 1.6400.
Can you imagine? Wow.
So what I do is just to come here, place my order here for sell, 1.400, sell limit. What does the market do? You go and check exactly that place. What happened? Come and check exactly that place. What happened? So what you need to confirm again, what session is that? Look at it. What session is this? That is night session.
Yeah, initial session.
So that means I'm not going to do the trade. All right. I will have to wait. I will have to wait for this is
1 o'clock.
Yes. No. What are we talking? This is New York.
New York.
I'm not saying it well. What is this, guys?
Okay, this is 2 o'clock now. This is 2 o'clock.
Do you see it now?
Yeah.
That's 2 o'clock. 10 here. This is 2. That's New York. So can you see? Do you see what we have just done now? We have looked at the market holistically, and we are looking for sell. Even at this level, euro interest rate was still 0, and then that of AUD was still positive. So if you are looking for sell and you are seeing a structure like this, expect it to pull to the upside, grab liquidity at the previous supply level, look at it, we look at the whole number level. That is where bank position their order, guys. Between here and here, all the damage is done. All the retail trader, they are gone. Between here and here, they are gone. People that put a buy stop here, as the market go, what does it do? This market will never stop until you get to this fair value area. Can you see? That is the rule. It's rule. It's rule that nobody has set, but I have set it, and I will document it. When the market catch liquidity like that, it doesn't stop until you get to the fair level zone. Where's the fair level zone, guys? Between here and here.
Side, yeah.
So why is it coming to this level? Why do you think it doesn't retrace here? The reason why it doesn't come here is that it has used all the others here. It has used it as liquidity for the downside. So there is no incentive for it to come back. Come and do what? To allow these people to get out? No. So it will get to here when the pain level, that's what is called pain level. When the pain level, or pain index of the retail trader has gone very high, they have loose hope in the market. That's when you now expect this pullback to happen. When you get into the fair value area, this pullback. Look at it. From here to here, 61.8. Boom, again. Do you get it now? Now,
yeah.
Let's look at the setup. And this thing happens everywhere. It takes different shape and different forms. Now, look at it here. From here to here, always make use of your field, guys. Always make use of your field. If you have a market that is consolidating at 61.8, you see, this consolidation not look too obvious, but this is a break. It's a consolidation.
Yeah.
Do you understand me?
Yeah, I get you.
When you have a market consolidating at, 61.8, just watch the market, see the supply areas. When this market supply from here, you see where the market came to. What does it tell you? Big order was pumped here. So in that case, if the market is consolidating here at 61.8, expect it to flip to grab order at this level. This is what is called demand and supply. To grab order at this supply level and make a move to the downside. And what did I tell you is the rule? It's not going to stop until you get to the fair value zone. Where is the fair value zone in this area? Look at it. Did it stop until you get here?
So that
is it. It must get there before it starts correcting. And that is a sign that this guy is not going to look up again. Just look for corrective structure here and then sell. Do you get now? Now, let's go. Let me show you another example. This is the foundation. This is the basic. Once this is not known, there is problem. Let me show you another thing. From here to here, 61.8, market is correcting. So where is the big supply? Here. Big supply here. So what are you to do? Let this correction, don't sell here, let it pull up. Boom. Do you see? And it usually go up with a powerful, bullish price action. Can you see? Every right thinking person will say this is a buy trade. Let me show you something. Can you see? Do you see this? Powerful bullish. So we are going to the upside. The market is bullish now. Many people will be buying here. Here. You'll be buying here. Why are you buying on impulse? The market has only moved to the upside to grab liquidity. That's all. Because you have big supply here and your bias in the realm of the fundamental is bearish. So let's play. Let's play it. Can you see? Now, what time is this? 1900. So you don't even take it. Don't take it because you are not sure that the right volume will come to push it to the downside. See, we're now in London session. Let it push. I don't take this kind of trade because you are not sure of liquidity availability in the night. So once it gives you this, you are not sure that you are bearish. So you now want to look for corrective structure. And what has it done? It has taken you in the fair value area. That's all. That's what you want to see. You know, so you want to see correction. Correction. At this stage, in fact, if you want to sell, if you can put your stop loss here, you are not going to lose. It's a structure, and the structure is structure. All right. So that's how we do it. Now, let's go to the trades that we take this week. All right, and explain why we have to take those trades. But before then, let me show you something, and you must understand this. When the market pulls down like this, and your bias is downside, look at my fib here. You must ensure that if you take this fib, ensure that the market comes to 50 to 61.8. It's very, very important. If the market does not come to 50 to 61.8, don't even look for continuation of the sell to the downside. And after the market moves to 61.8 on 4 hours, now you go to 1 hour to check this. We have seen what's this pullback. We now want to analyze this pullback on 1 hour. Ensure that you see something like this: up, correction, up, correction, up, consolidation, consolidation, consolidation. Once you are seeing this consolidation in the area that is close to 61.8 or at 61.8, just expect that this consolidation will break up to the upside to tap liquidity at the 61.8. And once this liquidity is tapped, what do you see next? Boom, to the downside. If you don't see this liquidity, maybe you are seeing something like this: up, correction, up, correction, up, correction. You are not seeing this liquidity, just leave it. All you should expect, as you are not seeing liquidity, is see the move, boom, to the downside. All right? You have to see this move to the downside. Why do I say so? Because there are scenarios, there are situations where this market will not need to grab liquidity as you will expect, because liquidity has already been grabbed when this move was coming to the downside. This pattern you see here has already occurred here. So there may not be need for it to be repeated here. But the only thing you will use to know that this market is now on its way to the downside is that you are going to see this move, boom, to break this previous low, boom. Once you break it this way, all you'll be looking for is, you'll be looking for correction, correction, to come back to this level and now sell. Do you understand? So that is the difference. That is the difference between a market that grab liquidity, you know, and the one that doesn't seem to grab liquidity. Because most of the time, you want to see liquidity grab from aftermath of formation of what? Consolidation. Consolidation. So if it does not happen, if consolidation like this does not happen here, and you see a normal pull, so if this one is coming, you want to take it as a pullback. But if, you know, you just come boom to the downside like that, you know that, oh, the down move has come, because you have already achieved 61.8 here. So all you need to do is correction and boom. So this is the concept that you must understand today. Next week, I'll give you another concept. But this concept, go and master it. It's very, very important. And I will tell you where we've got to, you know, apply it. Now, let's look at our structures. First, let's look at Euro GBP. Euro GBP. I believe we all enjoy Euro GBP trade. It was an amazing trade, guys. At least we make some dollars there. Okay, even though it has not pushed so hard, at least we caught it at the right level and we make small money. Okay, so now if you look at, I told you for you to analyze, you must first go to fundamentals. Well, what do I say? Go to fundamentals first. And my interest rate on euro is 0. My interest rate on GBP is what? Is 1. So it pays to buy GBP and sell euro. It pays to buy GBP. If that is the case, if we now have euro GBP, you now have euro GBP, it's better to look for what? Sell opportunity. You understand? So, haven't understood it this way, we now look at the chart. If you look at Euro GBP chart, you see it right here that Euro GBP is at the top. And you are looking for sell. Perfect for you. Do you get now? Perfect for you. So now what you have to do is that, fortunately enough for us, what did I tell you that time? Consolidating here.
Yeah.
So the market that has reached, you have gotten fundamental direction downside, and the market has reached the top, guys. So what are you going to be looking for? What you need to be looking for now is consolidation. You know, when this consolidation was developing, I told you that at this level, in fact here, I was saying that this week we are going to sell Euro GBP. This week we are going to sell Euro GBP. You know, I told you. And when this consolidation was happening, I sent a markup. I sent a markup to the group. Just watch this. Watch this. Let me take you to Telegram. You know, what I'm just trying to show you is that this is a proven method. I'm coming. All right, this is a proven method. Let me show you. So let me show you. Let me take you there. You know, once you master this method, then you are good to go. Don't need to rush. I'm going to show you. I must bring it out. Why is this guys not showing? Why is it not showing the chart? What's going on?
You would, I think you would have to, if you're going to share your screen, you have to share, like, you have to show the whole screen. I think what you did was to only share Zoom.
Okay. You are not seeing my Telegram.
No. We're not seeing your Telegram. Maybe you can actually click from the tab. Click on the tab. I think you're opening the app itself or something.
Oh, I understand. I see the Telegram now?
Yes, exactly.
Okay. I think I just have to leave that. It's going to waste our time. I don't want the stuff to be too long. Let's just leave that, please. All right. We are back to Euro GBP now, right? Are we back to Euro GBP? Hello, guys.
We are listening. We are back to Euro GBP.
Okay.
I see your screen.
So we are back to Euro GBP now. So now, you can see the consolidation here. So what am I expecting? When I got in, the question I asked myself is, after this consolidation, where is the next psychological level? That's what we ask yourself, guys. So I look at it. Where is the next psychological level? The next one is at 0.8600. 0.8600 here. Let me put it this way. Setting is how to do it. Setting coordinates 0.8600. Zero point 8600. Correct. Look at it. This is the next psychological level. So what I did was to place sell limit here. All right, and put 50 pips,
nice.
50 pips stop loss. That's it. 8650. This is my stop loss here. 8650. Because I look at it, when is this breakout happening? This is 600. This is 22. This is 2 in the night. So the liquidity was caught at the what? At the Asian session. It caught it right through the middle of London. Right? If you go to 1 hour, go to 1 hour time frame, see it's very clear. Caught it here, right? Give me about 16 pips drawdown, and the next thing is to flush down. I woke up to see it here. I woke up to see it here at London session, and I immediately send it to this group. Oh yeah, take the set here. All right, you see that I had a better entry than you, but my own was a sell limit. My own was a sell limit. Okay, can you see?
I took the trade anyways.
Correct. So why do you have this? Why do you have confidence that this will come? The reason, and I told you that I have a rule concerning this setup, and the rule is that once the liquidity is grabbed and the market is flushing down, it does not stop until you get to the middle or below the fair value. Can you see? Because between here and here, there is no incentive to go up. It can only go up after it has passed here. And the reason why it has to correct at this level or within this fair value is that this was the price that both buyers and sellers were going up and down, up and down, up and down. This was equilibrium price. And so when price get to equilibrium level, market will remember that participant will remember at this price where market was going up, down, no decision. We are back there again. But in this case, the liquidity providers, they have already, grabbed liquidity here. So they don't need to come back to this place. Okay. So even if we decided not to close our trade, the trade will still continue to go next week. But remember, something is very certain here. Something is very certain. When you take the fib of this move, all right, you are having a 61.8 at this level. 50 to 61.8. So my expectation next week is that this market will form a complex corrective structure. This one going up like this, correcting like this, pull up, grab liquidity, and fall. This is my expectation. Do you see? So the market is going to play on our intelligence. It's going to play on our intelligence until it gets to what? 50 to 61.8. And I'm going to tell you something that is very instructive here. Do you notice that at this price level, 50, 0.5 to 0.618, do you notice something that is very significant there? There is a supply area there. Look at this candle before this big one. Look at this big candle. Look at the candle before it, a zone. Look at the candle after it, a zone. Do you see the price range between here and here? The price range between here and here, that's what is called supply zone. Guys, that is exact level that I'm expecting us to sell this market next week. So I expect it to come this way. You know, I told you to sell here, we sold, but it was not doing fine. And today is Friday, that's why we close. Do you get now? That's why we close. So now, okay, so now what we're going to do is that we're expecting this market to give us a pullback up to 50 to 61.8. And at this exact, supply level, we're expected to sell. The next question you need to ask yourself right now is that, is there any psychological level at this supply zone? Yes, there is some psychological level. Some psychological level of 0.8550 here. The market may fall at this level, right? At this level here. 0.8550 at this level. So we're expecting to sell this market next week at this level. I believe we understand now. So that's how you do this analysis. Then the next thing, the next trade we took was Euro odd, Euro AUD. And let me explain to you the thought process behind Euro AUD. I've already explained to you before that Euro AUD is attractive to buy against the euro. It's very much, attractive to buy against the euro. And so, because of that, what we have to do is to look for sell opportunity in euro, in euro AUD. But do you know that even at the price level that we sold, it's just because we know or we knew the direction. Otherwise, it has not pulled up enough. Now, let me now show you something. What do you see here? This is equal high. This is the level this market got to before and cannot push further than this place. So what makes you to think that if you get to the same price level, it's going to push to break this low? No way, it won't happen like that. So for this market to push down very well, it has to clear this area, When it clear this area, clear this level, that is when this can fall. Do I have a proof that is going to clear that level, that is going to get to that area? Oh yes. Let's feel this move to the downside. Where do you have 61.8? This level. All right, this level. Then that's number one. Number two, at this price that is selling here, do we have supply level at the left-hand side? No. We don't have supply level, guys. That's why I say close the trade. Close the trade. It's playing off. It's playing right away, but that's not our trade. Because when you look left, do you have supply level? No. Now, if you look left here at 61.8 here, do you have supply level? Yes. Look at supply level here. Somebody will ask me, what do I mean by supply level? At this level here, you see the market struggling, buy, sell, buy, sell, buy, sell. It means there are present of buyers here, not only sellers. But if this market breaks to the upside, between here and here, there was no existence of any buyer. It was all about sell, 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 sell. You see it? Sell candle all through, no buy candle. So if you now look at it and look for 61.8, when you look for 61.8, do we have supply? Oh yes. Can you see? Boom. So most likely this market is going to give us something like this: push up, push up. Once you push up to this place, we repeat the same process. We look at some psychological level of 1.5500. I've already said this in the group. Euro UD is coming to 1.5500. So at this level, once you have consolidation here, a push up will grab liquidity. You look at the session, is it liquid? Yes. Boom, to the downside. That is the trade for next week, guys. This is the trade we are going to take next week. Can you see that we are already forecasting Euro GBP to still pull up before we sell? The same forecast we are doing for Euro AUD for sale. Do you get now? So next is Euro card. I did not give you trade on Euro card, but I forecasted that it was going to fall. Forecasted that it was going to fall, although we did not take it. We did not take it. And do you know the reason why we did not take it? The reason why I did not say we should take this trade is simple. I will show you the reason now. All right. I already made a, we made an analysis in the group, and we say that this market is going to fall when it gets to this price level. And then after this correction, a push up, this correction, I said this is the last push up, and we will sell. But why I did not suggest we take this trade is because it was selling correctively. And Euro card has a character. And what is the character? Anytime it's coming correctively like this, it will just shoot up, break this top. It will just shoot up all at a sudden, break this top and flash down immediately. This is a well-known structure for Euro card. And then the liquidity graph you are thinking this one has taken, it is this one that will come and take it. This correction, just take it, boom, to the upside and fall. But now, so that was why I did not take it. But can you see? Boom. Then let's use one, let's investigate this move to the downside and see what could have done better another day. Let's investigate it with 1 hour time frame and use divergence. Let's use divergence to investigate it. Do we have divergence or we don't have divergence? Let's check it. See it here? Let's pull up our indicator. Can you see? Guys, let's cover our face in shame. Let's cover our face with shame. This is a convergence, it's not a divergence. And this convergence in the structure shows that this move to the upside is not going to happen. And this is what is called test of a fake flag. Go and study my video on YouTube, Divergence Trading Strategy. Just search Nathaniel Tunde show Divergence Trading Strategy. You will see it there. This will give you that confirmation. You see it? This market is giving you, price is giving you lower low here. What does indicator give you here? Lower low. Indicator does not give you a lower high for you to think that this flag will break up to the upside. So, and if you go and study that my video, I told you that once you have a convergence instead of a divergence, this move to the upside will not happen. You are rather going to get this move to the downside. And how do you catch the move? I told you, take a fib of this move, target 61.8. Where is 61.8? Oh, here. All right. Boom. That's your entry. Stop loss here. That's all. Can you see? We did not use the instrument that is in our hand. We did not use our tool, very well. Otherwise, we could have caught this trade. And can you see? Massively flows down. How many pips? We missed this trade, guys. That's about 230 pips right now. We miss it. But nevertheless, by next week, we are going to have something. This move is going to correct. We have a lot of tricks to take next week by the grace of God. We are going to have this, this structure. We are going to have this correction come to what? 61.8. Okay? It can take many forms. It can take many forms. I'll show you the form it can take. Because we did not have the kind of liquidity we expected it to grab here, we could have it to repeat itself here. We could have it come this way, consolidate this way, throw up this way, and come down. We could have this structure next week. And then it will give us a straightforward structure by just come, correcting, come, and flush down. All we want is that we want this market to give us 61.8, we sell, stop loss here. So that's how to deal with this stuff, guys. I think we also look at Euro New Zealand. You know, yesterday we took Euro New Zealand and we make some profit. But today I said, do not take Euro New Zealand. Why? Even though I knew Euro New Zealand was going to sell, I said, don't take it. The reason why I say you should not take it is that despite the fact that these guys are tapped in 61.8, can you see? It's exactly at 61.8. Can you see? But why I said we should not take it, I will show you now. Go to AUD New Zealand. Before I go there, let me show you something. You have AUD NZD. All right, and then you have Euro AUD. You have Euro NZD. So you can see that the two, you have Euro here, you have AUD NZD here. This AUD NZD here is the same thing as a pair here. It's a pair here. So now what we do is that we look at the direction of AUD NZD. So if it's bullish, it means that AUD is stronger than NZD. So if it is stronger than NZD, it means that Euro AUD will sell more. We sell more than Euro NZD. That's just a trick. You have Euro AUD here, you have Euro NZD here. You have Euro here, the base currency Euro, the quote currency AUD and NZD. And when you combine AUD and NZD together, you get AUD NZD. Do you get now? Now, if AUD NZD is bullish, it means that it is AUD that is going up and it is NZD that is weak. So if that is the case, if you now combine Euro AUD together and we say AUD is strong and Euro is is stronger than NZD, then selling Euro AUD will be better than selling NZD Euro NZD. Is that okay now? And you can see by yourself. Let's go to AUD NZD first and see the direction. AUD NZD. Let me just go direct. AUD NZD. Can you see? So I already saw this corrective structure. I saw this corrective structure. It's a contracting flat, and I knew it was going to go up like this. So for that reason, it means that AUD is stronger than NZD. That is why AUD NZD is going up. So therefore, I want us to sell Euro AUD. And then let's go to Euro AUD. You see how it's selling. Better than Euro. Can you see? Can you see it now? At this level, can you see? Can you see how it's selling? The selling is better than Euro NZD. It's better than Euro NZD. Can you see Euro NZD even consolidating here? Consolidating. Do you see such consolidation in Euro AUD? No, can't see it because AUD is stronger. So Euro AUD, can you see? And I believe I gave the trade at this level, something here. And can you see? That's made about more than about 100 pips to the downside. But today is Friday, we just have to get out of the trade. Don't worry, we are going to catch the move next week. So now what are we expecting by next week? What we are expecting is simple. On Euro, I've already discussed Euro NZD. The Euro, I've discussed Euro AUD. Euro NZD, what we are expecting is simple. We have already fulfilled the structural requirement by getting to 61.8. So what I will expect is that This market should consolidate, pull one to the upside, and come down. That's our structure. This is what we should be expecting next week. It's going to be a very sweet set. Okay? So those are the setup we took this week, and the lesson from them all. I don't want to make this session to be too long. The recording is going to be available on YouTube. Go to upload it to YouTube. Remember, if you have not subscribed this channel, try to subscribe it. Share to your friends. You can share it to your friend, even though this is a private session with my personal students who have used my affiliate links to register their account. I want to make sure that we do together. All right. So that's why I put this session in place. Ensure that you share this market, this video, share the link to people to watch, let it benefit their lives, and then encourage them to also subscribe to the channel and press notification bell. Okay, not just doing that alone. Go to the comment section. Tell me whatever video you want me to make to clarify one or two things for you. Just send me the chat, on the comment section on YouTube. I will read it and definitely reply you with such video. All right. So, any question before we come to the end of the session?